Hello viewers, welcome to my new video. Today, let us know about Keyman Insurance. Guys, there are three types of firm: 1. Limited company, public or private. 2. Partnership firm, and 3. Proprietary firm. Only proprietary firms are not allowed to buy Keyman Insurance. In case of private limited company, shareholding of key person should not be more than 75%, or shareholding of family as a whole should not be more than 90%. Family means spouse and minor children. The shares of major children will not be considered in family share as a whole. Keyman means a person of any business entity whose vision, creativity, intelligence and managerial skills gives progress, growth, prosperity and stability to that business entity, and on whom the business entity and its profits are dependent, and on whose sudden death the business entity would incur a great financial loss. Examples are Chief Operating Officer, Chief Executive Officer, Managing Director, Finance or Sales Director, Project Manager, Inventor, Supervisor and skilled laborers of any company. Anyone or many can be a Keyman to the company, while all or any one partner can be Keyman in partnership firms. There always remains a financial risk to the business entity on the death of such important personnel. And to mitigate such financial risk, the smarter business entities buy Keyman Insurance, which is nothing but term insurance on the life of such important personnel. The claim of Keyman Insurance replace the incurred loss from sales for the business entity, provide recruitment and training cost of the new personnel, maintain the credit with the bankers and or the creditors as well as the market stability of the business entity, saves the business entity from a loss or shutting down permanently, protects the interest of the employees, shareholders and customers. The key personnel also remains motivated and secured. Again, the premium paid by the business entity against Keyman Insurance are claimed as business expenses under Section 37(1) of Income Tax Act. Premium will not be added as perquisite on the hand of the key personnel, but the claim amount received will be added as business income to the business entity in that year. If that key personnel retires or leave the business entity can either surrender the policy or assign it to that key personnel, where the obligation of paying future premiums will lie on the key personnel. Almost same documents are required for companies and partnership firm. When the companies are required to submit their Memorandum of Understanding and Article of Association along with the copies of board resolutions stating the name of Keyman and the amount of insurance to be taken, the partnership deed along with supplementary partnership stating the name of Keyman and the amount of insurance to be taken are required for the partnership firm. Both the business entities are required to submit copies of audited balance sheet, profit and loss account, and income tax return for the last 3 financial years. Both are required to fill Keyman questionnaire. The Keyman of both the business entities need to produce individual income tax return or Form 16 of last 3 financial years. The business entities making loss or having downtrends of profits in the last 3 financial years cannot avail Keyman policy. The maximum cover allowed for Keyman of public limited companies and private limited companies having 10 or more employees or shareholder is either 1.5 times the average net profit during last 3 financial years, calculated before taxations, or 3 times the average gross profit during last 3 financial years, whichever is lesser. The total profit for the last 3 years before tax is the maximum allowed cover for Keyman of private limited companies having less than 10 employees or shareholders. The net profit of 1 year for 1 year companies and 2 times of average net profit during last 2 financial years for 2-year-old companies are the maximum cover for Keyman. The Keyman of partnership firms are allowed to have a maximum cover equivalent to their share value in the partnership firm, and are the summation of their share capital and goodwill. Goodwill means the last 3 years' net profit, which is gross profit minus income tax paid. Any questions? Drop me your comment. Stay happy, healthy and financially protected.